welcome to Crystal Ball. This is the show where we invite some of the best investment gurus to gaze at the crystal ball and delineate trends in global financial markets and economies. Today I have with me by far one of the best experts on emerging markets, Dr. Mark Mobius, Executive Chairman, Templeton Emerging Markets Group. Dr. Mobius oversees the investments directly and indirectly of nearly $44 billion across 38 funds that are based in 60 global emerging markets offices across the world. In 2006, Asia Money, the magazine, listed Dr. Mobius as one of the 100 most powerful and influential people in the financial world. Well, on that note, Dr. Mobius, thank you very much for joining us. Well, you come at a time when the Indian markets are in a state of trepidation. In the last 4 days, the Nifty has lost 400 points. That's nearly 6%. And in fact, from its recent highs, it has fallen a good 8 to 10% in just about 4 weeks. Does that bother you? Do you think there is more fall to come?
Well, it is true. The market, as you know, moved up very, very rapidly in India on the back of the optimism surrounding the election of Mr. Modi. And now there is a fallback because people are beginning to realize that all things don't go up forever, and there's some companies that were overvalued. However, we are still in a bull market in India, and these corrections are corrections, not necessarily entering into a bear market. So I would say this provides some opportunity to buy stocks that are reasonably priced. The other good news, of course, is that there will be more stocks coming into the market, more IPOs, new issues, and that will provide enough liquidity for investors to come into the market.
Is this already buy time? Or do you think that the overvaluation post Narendra Modi's election was more steep and you will wait for even lower levels before you start investing or start buying?
Well, on an individual company basis, we are still buying. We still have orders out there. We have buy limits, of course. So the orders are there. It's a matter of when those limits will be hit.
Okay, but what's your sense about valuations in India at this point in time? Depending on the kind of EPS growth that people are looking at, it's between 16 and 17 times. Do you think the markets are at the moment looking overvalued to you?
Not really. If you look at the global picture, 16, 17 times is not excessive. It's higher than what you see in China, but it's not excessive. And of course, as you know, China's catching up very, very fast. So on a comparative basis, India is not that expensive. And for that reason, we're looking more closely at not necessarily the large names, which have run up a lot, but some of the smaller companies that are attractively priced.
Okay.
So the good thing about India is you have a tremendous scope. You have a lot of listed companies. Of course, for our global emerging markets portfolios, we can't buy too illiquid stocks. But for the small cap funds, which are growing very fast, there are lots of opportunities in India.
Okay. But you're not worried about earnings growth, are you? The third quarter earnings in India were quite a disappointment, and we saw several downgrades. Are you worried that earnings growth is not picking up fast enough?
We're always worried about earnings growth. I mean, that is the key, and we have to look at that very carefully. But the range, the differences between companies is really significant. You have very, very big differences. So we really have to search for those companies that have good growth prospects and reject those that don't. So I wouldn't make an overall picture and say, you know, all the Indian companies are slowing down on the growth prospects. I don't see that. Because the economic growth in India is accelerating, as you know. Chances are India will outpace China in terms of growth this year and probably going forward.
Yeah, that's the expectation, that this year we will outpace. But just a word more of the worries that appear to bother foreign investors. There is a tax demand called the minimum alternative tax on foreign investors, something they weren't aware of. It's a retrospective tax. It doesn't apply from here on. That was clearly stated in the budget. Does that worry you, this tax demand?
Definitely. The tax is a major, major issue, particularly for portfolio investors who have taxes to pay in their home countries. So the tax issue really has to be focused on very, very clearly by the government in India. they have to make the tax picture very transparent, very predictable. Otherwise, it's going to be a real problem, and people will reject investing in the country as a result of that.
Okay. Well, let me drill down now to some of the sectors that might interest you. I noticed that in some of your funds, TCS is an important stock, especially in your Templeton Emerging Market IT Global Fund. How concerned are you about the numbers that came out? The stock lost a goodish bit after the numbers. Are you worried, or do you still think it's a good investment?
It is still a good long-term investment because India has made tremendous strides in the outsourcing arena. And they've gone from simple outsourcing to more complex consulting and technical work. As I travel around the world, I find these companies working in every field in most every country. So I think there's something there that will last for a long time. So we want to be exposed to that sector in India. Of course, from year to year, there'll be corrections in terms of earnings. But from a longer-term perspective, they're in a very sweet spot. A lot depends, of course, on the rupee. As you know, the rupee now is beginning to flatten out in terms of the devaluation. The devaluation has already happened to a great extent against the U.S. dollar. So we're not too worried about strengthening the rupee. And it'll probably get a little weaker from here on in against the U.S. dollar because the U.S. dollar is getting stronger, which is positive for those outsourcing companies.
Okay. In your Franklin India funds, Dr. Mobius, what would be your sectoral preferences? Would you prefer now sticking to domestic India stories like financials, banks, or materials, capital goods? Is that the accent, or is it the defensives like IT?
The emphasis would now be more on consumer because per capita income in India is moving up. People are getting money for disposable kinds of items that you can buy, and I think that's where the action is going to be going forward. The challenge, of course, is to find those companies that represent the sector that are reasonably priced. As you know, Hindustan Lever is off the map in terms of valuation. Great company, but it's very, very expensive. So we've got to find others that will be more reasonably priced. And that is the reason why we look at some of the small and medium-sized companies that may be interesting and have growth prospects in that sector.
Okay. What about the financials? There is a valuation argument against private sector banks, and there is a valuation argument in favor of public sector banks. But where do you come from? Do you like the entire world, entire sphere, or do you have your preferences there?
The preference is for the private sector banks. A good example would be Federal Bank in India, in the south, as you know.
Yes.
It's a very, very well-run bank, doing very well. So I would say, you know, can't make a generalization. There's some great public sector banks as well, but their prices have run up quite a lot. They're not very cheap. So we like the banking sector generally, and we have to pick and choose between those that have good valuations, whether they be public or private.
Well, what about the pharmaceutical companies? I mean, you have a lot of interest in several Indian pharma companies. At the moment, Sun Pharma is witnessing the probably sellout by Daiichi. Would that be a great opportunity for you to increase your investments in a company like this?
If the prices are right, then no question about it. The pharma sector in India is going to continue to grow, going to continue to do very well. And we're very interested. As you know, if you look at our portfolios, we have a number of pharma companies in India. They're doing some groundbreaking work. We like those companies that are doing some innovative research and doing something different than just doing the regular drugs and doing the copies. So I believe that this is an area that would be very good. And again, in the small and medium arena, that would be interesting for us.
Okay. Well, if you have to pick out some of the Sunrise or some of the companies that you haven't yet invested in India, which would those sectors be?
I would look at service industries. As you know, we have a private sector area, private investment, and we want to find companies that maybe not be listed yet, but are ready to be listed in a few years. And those are the kind of companies we look at that are in the service sector, whether it be repair and maintenance companies, whether it be restaurant chains, or whether it be cleaning services on an industrial scale. That sort of thing, I think, is very interesting in India. And I think those are going to be growing sectors.
Okay. What about, say, a company like Just Dial? It's one of those digital companies that offers a lot of search services. Would this also come within your gamut of services, or for that matter pizza makers?
No question. These would be interesting. The tech sector generally is very, very interesting in India, as you know, because you've got a lot of industrial engineers, a lot of people who are trained in mathematics, well educated, and we want to harness that in the companies that we invest in. So we're looking at that sector, and anything connected to the internet, of course, is interesting because the internet space globally is growing at such a rapid pace, particularly anything related to smartphones, because now smartphones are becoming the computer of the day. People are now abandoning PCs and just using their smartphones. So we'd like companies that have apps that can be used in smartphones and generally can utilize that technology.
Basically, how much by way of returns are you expecting from your India investments? I mean, if you took the Nifty as the benchmark, in the next 12 or 24 months, what kind of returns can one reasonably expect?
I would say anywhere between 12 to 15% annualized. That would be a reasonable expectation.
Just a word more about the macro returns or the returns at an index level itself. You said that you're expecting a 12 to 15% annualized returns from India, but at the moment the markets have been sliding fast. Do you think there's much more to go on the downside?
No, I think it's not going to be that much more. There may be another 5 or 10% at most. You must remember, in this day and age, volatility is tremendous. 20% these days are nothing. It's a correction. Whereas in the past, 20% used to create panic. Now it's sort of very usual that you get the kind of correction in a rapid bull market that we've seen. Okay. So I think you will see corrections, but it won't be that significant.
Dr. Mobius, we need to take a break at this note, but we are back with a lot more questions on China and the rest of the world. Back in a minute.